Fed Chair Jay Powell said his assessment of financial risks is just like what you want to hear from your doctor in old age. There are a number of things we should keep an eye on, but all things considered, you're in good health. But there is one area we've hit on recently that Powell also raised some concerns about, and it is our chart of the day. Here's Miles.
All right, well, what we are looking at here is the difference between business debt, which is in this purple line here, and household debt, which is the blue line. We see that business debt has risen appreciably over the last 5 years, rates at zero, companies using a lot of that money to buy back stock, and easy access to capital, and businesses have done what you would think they'd do. They've levered up. Households, on the other hand, they levered up during the mid-aughts. They got burned during the financial crisis. They have delevered. Jay Powell, in his speech today, said that overall the economy looks like it is in good shape, but if there is one area that you want to be worried about, one area that he is worried about, he is looking at this purple line. He is looking at the amount of debt that there is in the corporate sector right now. Now, if you look at corporate debt relative to GDP, it is not as high as we've seen at peaks earlier in the U.S.'s economic history, not peaks we saw before the tech bubble, not peaks we even saw in the 80s, but it is certainly on the rise. And the corporate sector, I think a lot of people have started to look at and said that is where the stress is going to come from next time. It's not going to be households. It's not going to be people losing their homes. It's going to be firms going out of business because they can't handle the debt load that they have.
You know, with the growth, economic growth probably slowing down next year, are corporates prepared to handle this? I read that chart as profit margins are going to come under attack pretty significantly next year.
Well, I think for the last 5 years, and we saw this play out perfectly during the oil crashes. We had a lot of analysts who came out and said, well, you know, it's going to be a problem for these companies to refinance their debt. Well, guess what? Rates were still basically at zero. Wasn't that hard to go refinance your debt. But when we started to see things like in the leveraged loan market, covenants are getting a little bit looser. We're seeing companies kind of give away, exceptions that companies might like in their, in their debt agreements. And that leveraged loan market is something that Jay Powell, Lael Brainerd, other Fed officials have called out. So I think that will companies be able to handle it? I don't know. It depends. Can you roll the debt forward? Can you meet those maturities? What are you going to do? Someone somewhere along the way is going to have to take a haircut. Been a long time since we've heard about that. But I think it just says the shape of this economy means that the next stress point is going to come from corporates, not from households.
Brian Sozzi, thank you so much for joining us. We have a rally underway on Wall Street. The Dow right now is at more than 600 points. We're going to be back with the closing bell right after this.